Hello, Cryptonauts. Welcome back to another episode of Cryptocurrency Chat. This is episode 461 on November 20th, Sunday evening, when we do our two crypto Twitter and crypto coins. And as it is, my name is Jake Jabarelli with my co host, Blockchain John. How's it going, John?
All good, man. Just watching the market, trying to wait for it to dip below 16K to buy in. That's my new buying point right now. But am I being too greedy? That's the question. Yeah.
Like I said, I'm waiting for it to drop below 10. I'm sure Michael Saylor won't like that, but maybe he'll
Yeah.
like it. Maybe he'll just say, well, I just need to take some of my coin from my personal pocket and buy more.
Yep.
Does Michael Saylor even have coin that's not Bitcoin?
That's a good question. I don't know the answer to that, and I hope he never reveals that.
I'm not. I don't want to know how much money he actually has in Bitcoin. I'm just saying it would be funny if he's like, I can't buy this. I can't buy more Bitcoin because all my coin is Bitcoin.
Watch, he has more Dogecoin than Bitcoin. That'd be crazy. All
That
right,
would be very weird.
let's get ready for the first news provided by Decrypt.co, written by Tim Haki. This week on Crypto Twitter, further FTX fallout. Bum bum bum. All right, this week Twitter served as a public confessional where the many crypto companies affected by FTX's sudden historic collapse came forward to declare just how much exposure they had to the bankrupt exchange. The intensity of conversations surrounding the collapse exchange didn't really abate this week. On Monday's Binance CEO Changpeng Zhao, who 2 weekends ago exposed FTX's insolvency when his announcement that Binance sell all its holdings of FTX's native token FTT caused a bank run on the exchange, denied accusations that he was just shorting the token. Images of former FTX CEO Sam Bankman-Fried's luxury penthouse in the Bahamas were being circulated that day, and there's some images there from Watcher.guru. That is actually very nice. The disgraced former billionaire, who was also tweeting cryptic one-letter tweets by Tuesday, it became clear that he was very slowly writing the words "what happened." On Wednesday, he gave his side of things with the caveat that his, quote, memory might be faulty in parts, unquote. The full thread ran 32 tweets long. Yeah, that's odd.
Finally coming down from the high that he had, and that's the reason he was treating things that were a little weird before, and now he's actually sober, and he's like, wait.
Bankman-Fried's strange behavior prompted several conspiracy theories, the most convincing one being that he was tweeting new tweets while he was simultaneously deleting old ones in an attempt to escape detection by bots that repost deleted tweets. Okay, so it actually worked, LMAO. That's what he's doing.
Uh-huh.
He needn't. That's weird. He needn't
Yes.
have gone to so much trouble, though. Turns out one account archived them. And there it is.
Yeah. Well, your tweets are archived when you're famous.
Ethereum's co-founder Vitalik Buterin on Tuesday weighed in on the whole drama. And here's a tweet from Vitalik. Automatically downgrading every single thing SBF believed in is an error. It's important to actually think and figure out which things contributed to the fraud and which things didn't. Don't be the guy who would have tried to cancel vegetarianism in 1945. On Thursday, a 30-page affidavit from the new FTX CEO, John J. Ray III, revealed that FTX itself doesn't know how much cash it has or even how many people it employs. Ray said he had, quote, never seen anything like it in his career, and he was the lawyer who shepherded Enron through its historic bankruptcy proceedings.
This is
Jonathan Wu,
hilarious.
yeah, that's crazy. Jonathan Wu, who headed growth at Aztec Network, an Ethereum-based privacy solution, cherry-picked the best parts of Ray's report in a thread. And here's that. I just read FTX's Chapter 11's first day affidavit. In it, the appointed restructuring CEO, John J. Ray III, who oversaw Enron's bankruptcy proceeding, calls FTX's case the worst of his career. Its contents are shocking. Here's the highlights. So check that out if you guys
Yeah.
want to know more.
It's absolutely insane. I think Enron was pretty bad, but it's funny because it's like it's almost like a stoner. I wouldn't be surprised if that was true, but it's almost like a stoner was running FTX.
Mm-hmm.
I mean, I just put it over there. I'll take care of it later.
Jordan Schatzel, an independent journalist, pointed out the fact that lawmakers investigating FTX's collapse have been pretty chummy with Bankman-Fried's over the last year.
Mm-hmm.
And continuing on, Twitter's new CEO, Elon Musk, is himself feeling heat from authorities over his conduct since taking office, particularly the mass layoffs. Musk used the FTX catastrophe to make light of the situation in a meme. And here is that meme from Elon. FTX losing over $1 billion of client funds. Senators calling for the FTC to investigate Twitter. Oh, hold on. In other news, go ahead.
I'm not sure which, or shouldn't the top rhino be FTX? Or no, the top rhino should be Elon and the bottom one should be Twitter. No.
All right, continuing on. In other news, several businesses did well this week following the FTX catastrophe, including cold wallet manufacturers and decentralized exchanges, both of which offer customers self-custody solutions to keep their cryptos safe from withdrawals, freezes by secretly insolvent exchanges. Uniswap creator Hayden Adams noted that on Monday. His exchange was the second largest in the world for Ethereum's trading behind Binance. Vitalik Buterin welcomed the sudden change in consumer preferences. He also urged caution, and here's that tweet from Vitalik. The centralized anything is evil by default. Use DeFi and self-custody. Ethos did very well this week, but remember that it too has risk, bugs, and smart contracts code. Important to guard against it. Keep code simple, audits, formal verification, etc. Defense in depth. Grayscale's world-leading Bitcoin trust has been hitting new lows as a result of the current bear market. Its shares currently trade at a heavy discount of 45% to its underlying assets. This is not good news for investors. Crypto researcher at Honkasalo explained in a couple of charts why it would be a bad thing for the whole market if Grayscale were to suddenly liquidate its crypto holdings. It may seem unlikely, but the crypto asset manager has done it before with XRP. And that is true. You would not want to see, Grayscale dump all those
635,000 Bitcoin back on the market.
Yeah, let's not do that. Hold on to those.
That's almost as much as Satoshi owns, right?
Finally, El Salvador's Bitcoin-loving dictator Nayib Bukele can't get enough Bitcoin. Neither can Tron founder and CEO Justin Sun. And here's a tweet from them. We are buying 1 Bitcoin every day starting tomorrow. And Justin Sun replies, we echo Nayib Bukele's initiative in buying Bitcoin daily. We will also buy 1 Bitcoin every day starting tomorrow. And that's the end of that. So buy yourself some Bitcoin. Yeah.
Someone's definitely buying it with the price going down. Anybody who wants it, it's out there. It's only the price of a cheap old car.
Yep. I'm buying it.
This week in coins, Bitcoin avoids heavy losses as FTX contagion spreads. Oh, it's a disease now? It's also written by Tim Haki. This being week 2 of the FTX disaster story, crypto investors can expect things to get worse before they get better. Yeah, with Bitcoin falling again. However, the two market leaders, Bitcoin and Ethereum, no longer appear to be in utter free fall. Bitcoin's the largest cryptocurrency by market cap dropped 1% over the past week and traded at 16.5. Ethereum, the number 2 crypto, shaved off about 4% of its value down to about 1,200. The start of the weekend, at least. Both of them appeared to rebound on Tuesday after fresh data from the U.S. Labor Department's latest PPI, or Producer Price Index, report showed a decline in the cost of goods excluding food and energy. They took it as a sign that U.S. inflation could finally be calming down, which could give the Federal Reserve some encouragement to relax its tightened fiscal policies. Stocks also rebounded at the news.
Which it won't.
Several leading cryptocurrencies declined in value by between 5 and 10% this week, including Cardano, Polygon, and the popular dog meme coins, Doge and Shiba. The biggest loser among the top 20 cryptocurrencies by market cap was Solana, which sank another 17% to 1331. FTX was one of Solana's earliest backers, and the entire Solana ecosystem is affected by the implosion. The last radius includes layoffs at Solana's NFT protocol Metaplex. The extent of Solana's network ties to Sam Bankman-Fried's collapsed multi-billion-dollar crypto empire came to light this week, along with declarations of exposure to FTX by several other leading companies in the industry. prices stabilized this week, there came a raft of revelations within the industry as companies stepped forward to declare the extent of their exposure to the bankrupt FTX. On Monday, crypto lender BlockFi denied claims that the majority of its assets were tied up in FTX, but told customers that withdrawals will remain paused. Sure, guys, sure. Citing significant exposure to the collapse exchange, BlockFi has suspended customer withdrawals last week. The company is also considering filing Chapter 11 bankruptcy. Decrypt reporting confirmed is likely facing imminent layoffs. I was an early investor in BlockFi, not early user, I guess, but I just didn't like the fact that they only had like 5 coins available for investment, and their investment interest rates were terribly low. Like they just weren't. Obviously, Celsius was better, but Celsius was a Ponzi scheme. But anyways, and I was more invested in Celsius, but I took all my money out of BlockFi like a year ago because I was like, this is dumb. Why am I even here? Yeah. Anyways, crypto hedge fund Ikigai confessed to having a large majority of its total assets tied up in FTX in a tweet by founder Travis Kling. Kling also apologized for investing customer funds in FTX and having actively endorsed it. I was wrong. I was making so much money. I was wrong. I was so wrong. The Solana Foundation published a blog post revealing that it had about $1 million in cash or more, or equivalent assets stuck in FTX. Furthermore, the foundation holds 3.24 million shares of FTX Trading Limited stock, common stock, and 3.43 million FTT's tokens, and 134.54 million SRM tokens from decentralized exchange Serum. Bankman-Fried co-founded the Solana-based DEX in 2020.
Yeah. So that's what I was saying last week, man. Yeah, that's what I was saying last week. So what's the other company? Alameda. What Alameda basically did was say, hey, we'll help fund you guys as long as you guys hold the FTT tokens on the FTX exchange. And obviously, when that went belly up, and of course, what FTT ended up doing with their money was just, shilling it to other investors. Yeah.
Yeah. No, I mean it is. They did act like a bank, and that's not surprising. This is what banks do. It's just that there was nothing behind it, right? So I mean, dollar. If we had a run, this example that happened to this, the run that happened on the dollar was back in the 1929 when we had Black Monday, and the banks closed because it didn't have the cash to give to people. The dollar itself, and yes, the dollar did take a hit in its effective value because so many people trying to pull their money out at the same time. And so this is not uncommon. This is what happens when there's a bank run. And if there was another bank run, but on a larger scale like this, I think the U.S. economy is something like $90 trillion effectively.
The GDP.
And if there was a really solid, a real bank run where 25 trillion of that went out, it would drastically affect the market. So this is how it works. It sucks, but this is how it works. Yeah. Foundation's disclosure also clarified the extent to which Bankman-Fried had invested in the network's token. FTX and Alameda together had brought 50.5 million purchased, currently worth just south of $666 million. It's 2/3 of a billion. Tuesday, crypto-centric investment firm Sino Global revealed in an official statement that it had mid-7 figures exposure to FTX, but it continues to operate as normal. They must have a lot more money. 7 figures is what? Under 100 million? Crypto exchange Liquid, actually it's under 10 million. Liquid Global on Tuesday froze all withdrawals, including fiat. In compliance with the requirements of voluntary Chapter 11 proceedings with the United States, Liquid Group and all of its subsidiaries, including the Japan-based Kony, I hope that's right, Corporation and Kony PTE in Singapore, were acquired by FTX Trading Limited in an undisclosed deal earlier this year. Circle, issuer of stablecoin USDC, confessed in a regulatory filing that the tiny equity position in FTX that CEO Jeremy Allaire alluded to immediately after FTX's collapse amounted to $10.6 million investment. Filing said that Circle expects its financial performance to be materially lower than projections. That's such a finance geek way of saying it. Made last February. Yeah, things are not going to be great, but we're not going to say how bad they are. until the quarter ends, and then you'll see. But we're not going to see it now. On Wednesday morning, crypto prime broker Genesis announced to its clients that it would pause withdrawals from its lending arm, citing unprecedented market turmoil. Something blew up over there from FTX bankruptcy. Just a week before, the firm had tweeted, "Our operating capital and net positions in FTX are not material to our business." We're not lying to your face. The circumstances surrounding FTX have not impeded the full functioning of our trading franchise. BS.
Yeah, you know what I think is going on. A lot of these companies that are saying that they're not affected, I think what they're doing is literally getting investor funds like at the last minute. If they can catch that investment fund, then good, they stay afloat for the time being. But if they can't catch that, then they're gonna have to go belly up.
Catch these hands. No. Even the blockchain analytics from Chainalysis and documents filed to bankruptcy court in Delaware was identified as an FTX creditor and is owed money in the bankruptcy proceedings. So, yeah, I hate to say it this way, but I'm pretty sure the Sam Bankman-Fried story is going to make an amazing movie in about 2 years.
Oh yeah, for sure.
Probably writing it now.
Yeah.
Just like Facebook and every other major industry that people are writing a movie about.
They already made a cover of it. It's on the first article. Where is it at? Scroll up to the top.
Is there?
Where is it at? There it is. Yeah, The Big Short 2.
Oh. Yeah. So, yeah, it's. Yeah, well, let's just get the rest of the news. We can talk about the rest of it later.
Right. So the third news of the day is once again from Decrypt.co, written by Andrew Bengansky. FTX says it owes over $3 billion to its 50 largest creditors. So who's representing FTX? That's the quiz of the day. All right, time's up. If you didn't get that, and that was it John James Ray, something like that?
John J. Ray.
Yeah, there it is. John J. Ray the third.
John J. Ray.
So he's the new CEO, Chief Executive Officer of FTX Global, and now that he took over that position, it is a shit show to say anything less about it. Yeah, it's bad. It pretty much this.
The thing that was so funny to me in this article in particular, not just this article, but in general, what's happening. John Jay been coming out in tweets from various people over the last week. They didn't have an accountant, didn't have a bookkeeper. They didn't even have an accounting department.
Which is the
no
weirdest
accounting
thing,
whatsoever. They had no bookkeeping whatsoever. And that's the reason I said, I made the joke earlier, was like, it's like a stoner was running a company. Like, hey, oh, you got some stuff for me? I just threw it over there. I'll take care of it later. Didn't take care of any of it, ever. It was just winging it the whole time.
That's crazy, dude.
And I would compare this, not favorably, but I mean comparably, to the Firefest debacle. And when I can't remember the name of the guy. He went to prison for it for 4 years. He just got out recently. I heard about that. But he was just going into New York and to places on the East Coast, from where they were in their island habitat in the Caribbean area, just asking for more money. You're just going to people like, yeah, we got this great thing. Just give us more money. Just give them more money. I mean, I don't remember exactly how much they pulled, but it was tens of millions of dollars, nothing compared to what Bankman-Fried was doing. But it's not like what was going on here had nothing to do with. There was some organization, but most of it was for crypto organization type stuff. And I have a strong feeling that once this all comes out and the court decision and everything happens, we will find out that it was a lot like, in my opinion, Fire Festival, and that there was really nothing in the back end other than just the servers that we had. There was no real corporation. There was a name of a corporation, FTX, right? But there wasn't really a business there. No.
Yeah, what surprised me is that they held 0 Bitcoin. That was like the biggest header to me. Like a company going belly up because they're trading horribly. They're doing basically a pyramid scheme, but they actually had no Bitcoins on their books. It's like, wow, that's so crazy. So it is possible to be a crypto scammer without Bitcoin. I don't understand how that even happened.
It had to have been some like, oh my, it's the same thing as like, oh my gosh, it's working, whatever is working. And people just keep seeing the money go up, and so like all FOMO is situations, people are just like, here, take my money quick. I can see that your returning interest is really, really high on everything you're doing. Just take all my money. Just please take my money.
That's crazy, man.
And people are like, yeah, of course we'll take your money. Billions and billions of dollars. Absolutely, we'll take your money. And no idea what we're doing. But that doesn't matter. We'll take money. I mean, it's a great, I mean, literally, it's a $40 million house, right?
Yep. So they're going to be having their court hearing pretty soon. I guess court documents will file just on Sunday today for the first day hearing of FTX's bankruptcy case. So that's going to be happening in Wilmington, Delaware on Tuesday.
I totally feel for Mr. A, because I have a feeling that what he took over is not something he wanted to be involved in.
I don't think anybody.
Enron is a different story. Enron was a real company that had real assets and real things. They were doing stuff. They weren't just a facade, right?
Yeah.
They were in their operation for a long time, not just a couple of years, but many, many, many years. So they actually had real documents and real function and real people working there.
One thing's for sure is that it's going to take them years. This court case is not going to just be a 1 year case. It's going to be years and years and years.
There's lots of discovery, lots of time. It's going to take a lot of hearings. It's just
there's so much information out there in regards to this stuff, and all the companies that are involved with it. Is that that's going to be like a 10-year ordeal or more for sure. It's going to be real bad.
I mean, I
hope it's not over, man.
But it's far from over.
Yeah,
no, it's got a long ways to go. All right. So some good news, in my opinion, from Aave and Uniswap, in this article by Liam Kelly, Decrypt. Aave and Uniswap show how DeFi keeps working amid FTX's crisis, and FTX contagion, all these different things are going on with FTX in particular. Anyways, I guess what I'm trying to say is the thing that was interesting in particular in this article, and makes note of it, was that for a very short period of time, right when this news broke, GUSD was actually just way up, and you could have in a short period of time made an immense amount of money off of the exchange. Particularly, interestingly enough, through DeFi itself. But the thing that's funny about this is, let's see if I got to read something explicitly out of this article. Exactly. Okay, so just as these two events happened, lending rates skyrocketed in order to attract more liquidity back into the platform. Remember, pretty much all of these decentralized lending platforms operate according to supply and demand. As supply rises, interest rate drops. As supply dwindles or borrowing rises, rates will rise. Basically, users were being offered a real-time reward for holding an asset that the market had temporarily defined as risky. So this chart shows the supply of APR on Aave. It's just, almost 100% increase in value. And so all these people were just like, oh, well, obviously the volatility here is quite, the lending rates will remain quite high. Ultimately, in the worst, rather unlikely case scenario, GUSD could collapse and Aave could vote to close a particular market. In any case, it won't be the project's founder, Stanley Ucloud, who decides how that happens, but the DAO will decide. And so
exactly.
I say as a contrast to what was happening with SBF, where it was pretty much him in control of everything. It's the DAO that decides. It's the people who decide. And of course, is there liquidity? Yes, of course. There's plenty of liquidity. Now, is there, $100 billion worth of liquidity? Possibly. I mean, Aave is pretty big.
You know what's really cool about this article is that a lot of people actually started buying up the Treasure and Ledger physical.
Right. That was another good point.
Physical cold
the Treasure wallet and the Ledger wallet both got bought up heavily because people were just like, I don't want to be part of this centralized BS that SBF has created.
Which is so great.
I want my own coins.
So awesome. That's finally people are taking the next step of holding their own coins, man. Love it.
This is the inevitable fallout, which is good. And we've been talking about this forever on the show. One of the things I said to you, John, just several days ago was about the Atomic wallet. And even though you said you weren't into the particular coin I mentioned, the thing that I'm not going to put it up on screen because it's got all my content in it. But I do particularly like the Atomic wallet because of its staking capabilities. And it's your coins. It's your private keys. You get to hold on to it, and they will give you interest rate. Now, I've been personally using the ZIL because ZIL pays 15% APR. 15. That's ridiculous. But the nice thing is, I can pull the coins out. They're my coins, and I have my private coins, my private keys, so I can pull them out anywhere. Zilla does have its own rules. It's the same thing as like the Cosmos network. Cosmos on Atomic Wallet will pay 10%. Now you can make twice as much as that if you use their network and not just Atomic Wallet. But it's actually pretty nice to be able to know that it's your coins, your wallet, and you have control. Now, when you want to remove that, it takes like 3 weeks. That's part of the reason that they can maintain the interest rates is because it's so long to remove the money that most people aren't going to do it. Like you can say, okay, I'm going to remove it, and then 3 weeks from now you'll get it back.
That also helps actually manage the whole pumping and dumping the coins.
Yes. Yeah. Yes. It regulates that, so it's it's much harder to do that. People can't just drop it in, pull it out within a few hours or a few minutes. So I mean, as much as it's nice to have like ZillQA or Zill and Cosmos or Atom, they're very fast. Their networks are very fast, so you can transfer money quickly. But if you've staked it, it's not coming out for 3 weeks. So it just slows down the How quickly did Sam Bankman-Fried lose $60 billion?
I think in 24 hours, or less than 24 hours.
48 hours, basically.
Yeah, 48 hours.
1 to 2 days, right? Mm-hmm. You couldn't do that with Cosmos or Zill. It'd take 3 weeks. If it was staked, that is. The nice thing about this is, like I said, why is it these wallets have become more popular? Because they're yours. You get to hold it. Yeah. It's your decision. And as it always should have been, as we've said many, many times.
So I would say this is the good news from the fallout.
It's good news.
Yeah.
It's very good news. All right. Let's talk about
Edward Snowden. All right. This one's written by Daniel Roberts. Edward Snowden's sanctioning of Ethereum's Mixer Tornado Cash was deeply illiberal and profoundly authoritarian. All right. Here's a video. It's a really nice video. I just watched a couple minutes of it, but it's nice to hear Edward Snowden actually talk to this stuff. So later on after the episode, I'm going to actually watch the whole thing. So this does get into talking about Tornado Cash, right? Let me just read a little bit here. Where was it at? Right here. Oh, no, not that one. Oh, I lost my spot. In slamming, that's what it was. There it is. I want to read this paragraph here. In slamming the U.S. government for targeting Tornado Cash, Snowden said part of the problem is the Ethereum's network's model, which displays publicly the transaction history of each wallet. You get this giant history craft that just follows you wherever, he said, and you create all these chain explorers, and then people see every smart contract you've interacted with on Ethereum. It's problematic. Now, once again, that's what we're talking about when it comes to your privacy, and that's ultimately what this comes down to is you got to protect your privacy. You don't really want people stalking you or following you through the blockchain because it is public information. Everybody can watch this in real time what you're doing with your wallets. That's why you don't really want to tell anybody what you have, how much you have, and what you own, because people can track that back to your wallets. Like for example, the guy that the hacker that I guess withdrew from FTX's back door apparently used a centralized exchange. I forgot exactly which one it was. BlockFi, I think it was. Was it? Yeah. And
one of the other sub companies.
Yeah, and it's kind of like that's the dumbest thing you can do is send it to a centralized exchange, but it is what it is. So at least those coins are safe. You got
a lot of this is that you can immediately keep an eye on where it's going. If people were doing it to Monero or something, then or some other coin that was harder to trace, Monero-based coins or something like that, then yes, you can keep your money private. Now his whole thing is about this is how the United States is, basically cutting off people who are using things like Tornado Cash. I think the problem, I guess, I remember you said this a while ago, and this was like probably 2 years ago, was that when people were moving money, people with lots of money, not like, I mean, you could probably even think this about Michael Saylor. Does Michael Saylor keep all 100? I'm not saying it's his money, but his company's money. Does his company, Microfinance, right? Did they keep all of their money, all the 130,000 Bitcoins that they have, in one wallet? Oh, no, they don't. And why is that? Because it shows there's too much. There's all this. There's like a Scrooge McDuck money vault. It's all in one place. It's easy to take a lot of it. Even if you didn't take the whole thing, it'd still be easy to take a good chunk out of just that one place. Oh no, when you're transferring large sums of money, you should do it multiple wallets. I mean, this is true even in regular fiat. People with billions don't have it all in one big gigantic bank account. They have it spread across many bank accounts and many institutions. So if they want to move something, it's not like, okay, that person just moved $30 billion somewhere, just all at once. No, they don't do that. They do it from a whole bunch of different places. So the same thing goes for crypto. You shouldn't just keep it all in one wallet. It's just dumb. So
here's another one that I want to read here that's important because I think his words are very wise. So here's another little quote here. It's actually, I think, the last paragraph. We need people to be able to transact on-chain at any time effortlessly without their awareness, said Snowden. The same way that you connect to Gmail through a web browser, it's using HTTPS, you should have levels of privacy protection baked into the protocol. And this prevents the kind of tomfoolery that we... was it tomfoolery? Tomfoolery. That we see the U.S. government beginning to engage with things like the OFAC and Tornado Cash. Yep. Right. And the good thing, I guess, what Snowden's saying here in this article is that he's happy to see that there's other companies out there coming out with privacy tools like Tornado Cash. So over the next year or so, we'll start seeing a lot more of these projects out there, which we definitely need. I'm with Snowden in regards to privacy is important. You know, that's why you should not be talking about what you have or what you own, how much you have, because people are gonna, hackers. Once you expose how much you're holding, hackers know who to target next. Like, oh man, you got 100,000 Bitcoin. Well, guess what? Yeah, I'm coming right for you, man. Yeah.
You should not be putting yourself out there unless you're ready to protect yourself.
Yeah. So once again, just watch this video here. Anybody that's listening or watching, there's a video on Decrypt. Check that out.
Last article, also by Tim Haki again. Thank you, Tim, for writing all these great articles. Grayscale's Bitcoin Trust hits record low 43% discount after FTX crisis. And we did talk about this earlier this week in Crypto Twitter, as well as coins. That was, John, you were more in depth on this point.
Yeah, so obviously Grayscale's been going down. The reason being is because it's actually... Grayscale and Genesis are owned by Barry Silbert, Digital Currency Group, and so considering that Genesis just went under, owned by the same company that owns Grayscale, it's kind of like, interesting. So where's the money at? And now that the Twitter heads out, they're kind of calling out, Grayscale, hey, we want you to reveal your books. They're like, no, we don't have to comply to what you guys are saying because we're not a crypto company out there like everybody else. We're actually legitimate on the stock market. We comply to these regulations, not to what you guys are talking about on Twitter, trying to have us expose our private addresses. Because that, once again, like I was just talking about in the last article with Snowden, privacy is important. GBTC, they don't want to reveal those addresses. They are compliant to what needs to be what they need to do to be in compliance, and that's that. So but people are still pissed off about that. Like, no, we want to know exactly which addresses are holding what and where they're at. And another person was, and it's not on this article, but what I was reading on Twitter, another person was arguing. It's like, it doesn't make any sense. Like, you're saying that it's going to be a security issue if you reveal your public address of the coins that you're holding these Bitcoin in. How could you say such a thing if the reality is it's technically not possible to hack that address? For example, he said, there's Satoshi Nakamoto address. Anybody would have hacked his address if it was possible, but it's not possible. And that address has been publicly there all around the world for all these years, and it's never been hacked. So if you can just come out publicly and let us know how much coins you're holding in your public address, there'd be no issue with that. So there's some arguments going on there, but GPT is not trying to be compliant with that. It's like, what, we're in compliance to what we need to be in compliance for, and we're not going to expose that. So the market has affected Grayscale, and it is down. What was it, 44%? I think it was. Was that what it was? Yeah,
40, a little bit less than half, but yeah, it's down pretty significantly.
It hurts. And I don't know if they're going to submit, but we'll see what happens in the next coming days in regards to that. another thing that GBTC has been trying to do for the longest time is trying to get spot trading. Was it in this article? Yeah, I think it was in this article. Spot trading. The reason being, instead of getting BTC and getting spot trading is a lot better because you're buying Bitcoin in real time and in the current market. That obviously is going to bring extreme value to GBTC. People are going to want to buy Bitcoin in real time. But of course, Uncle Gary doesn't want that. He says no spot trading. It's not going to help. It's not going to help. It's not going to happen under my watch ever. Underscore capitalized bold letters ever. It's not going to happen under Gary's reign. So that's that. That's pretty much it's a sad thing to know that. That's just his viewpoint. Knowing that I've watched Gary before he was the chairman of the SEC, and to me he was like, wow, we actually got somebody that knows crypto to sit in here that can actually help bring the big market, into the global market, into the crypto market. And have spot trading for all these crypto projects out there. That would be amazing. That was at least my vision, but obviously that didn't happen, and it's never going to happen, according to what I was reading with other articles saying that Gary has no plans on doing any spot trading anytime soon.
Oh yeah, it's not.
So don't forget. I do want to backtrack that Grayscale and Genesis is connected to the same company. Genesis was bankrupt due to the fallout from FTX. So is Grayscale next? That's kind of like why it's going down right now. Okay, ultimately that's pretty much what this article is.
They don't want to bail, but they're probably going to have to bail if they don't, something else could happen that's bad. So in general, get your coins out of centralized entities. I know it's a traditional way of doing it. We've been doing it for centuries, but you
want to make a prediction real quick? Is Grayscale going to fall out?
I think it's going to be a slow fall. It's going to be a crash like with FTX.
I feel that these are big. So Grayscale is not like crypto. Grayscale is holding Bitcoin, but it's part of the stock market. And seeing a company that falls 43-50%, that's not really a normal thing. Maybe 2-3%.
Not for normal stock markets, right? Exactly.
Yeah, maybe 2 to 3%. Yeah, that's normal. But 43%, dude, this is gonna flop. Like I don't know any other company that does that kind of stuff. That's legitimate on the market, right? So I think
we know what happened to Michael Saylor's first company back in 2000. So
yeah,
I'm
gonna predict that they're gonna go under.
Okay, well you can call it. I'm not gonna bet on it because I don't bet.
I bet you one Bitcoin.
I don't have a Bitcoin to bet.
All right, that's all I got.
Bet you one virtual Bitcoin that I don't have. No. Anyways, let's wrap it up. All right. Thank you all for watching and making it this far in this relatively short podcast that we do. We appreciate your patronage, and you can always check us out on YouTube or Odyssey. Check us out through CoinTree. All of our links are, of course, in every single description. Spotify, Twitch, Odyssey, Twitter. Well, if Twitter continues, YouTube. I guess on Discord if you like. And we always appreciate your thumbs up and your likes and any donations you're willing to make. With that was said, stack sats and hodl.
Adios.
Adios.